Welcome to our Forex and Futures forecast. My name is Jay Norris. I'm a trading instructor at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for all investors. First market we're going to cover is the Australian dollar. I think we nailed this one pretty good the last couple of weeks, where we highlighted that you had a double period. You could see the first bottom. And then the second bottom, we said, well, you may get a hiccup out of that, but overall, the path of least resistance is down overall, and that proved to be the case, where you continue to press this market lower. You continue to extend the bear market. In the Aussie not helped by that Chinese Purchasing Managers Index dropping below 50 like that. That's definitely a bearish indication. For China, Aussie really a bellwether for the Chinese economy of late, and that's in a nutshell where its problems are stemming from, why we continue to see downside, why we continue to see lower lows in this market. Next market we'll take a look at is the dollar index. A pretty good shakeout in the dollar index. On the other hand, I see it closing on a bullish note. You have a nice pin doji here. To me, that's a bullish indication. The market really closed where it opened. Hopefully you can see that, the detail, and you see that little zone there. That purple line's a 50% retracement of this overall move. The green line, our RTT level, that's going to be a critical retracement level also. So support held. The market closed where it opened after shaking out stops. Probably it looks like you drilled stops below 80.50, and it came back to close all the way back above that level. So dollar index, you're going to see a lot of headlines, a lot of stories over the weekend about dollar weakness. On the other hand, it held up pretty well. To me, this looks like a capitulation. If this market starts firming up, I'd go with it. To me, I'm much more relieved now for the upside. I think if you make higher highs, now I'm certainly looking ahead, but if you can eclipse this, here's a big RTT level right there, where you could see that was the November high also. You eclipse that level, I think this guy's out of the gate. So this is one to watch, where it's support held. We'll continue to monitor that. If you see continued strength in the dollar index following the recovery from the Friday sell-off, I would look for more upside. I think this is a critical level. I think you're at a very interesting junction here. After blowing stops out, we'll see which way they take. It looks like a classic reset on the downside to me, and that'll be our theme in most of these markets today. Here's the euro, for example. Similar, you had a blow-off on the upside, and it closed weaker. So to me, this is a bearish pattern. Potentially you're putting in right shoulder here on the overall head and shoulder top, right? So we're going to have to see how that plays out. But yeah, I'm actually more comfortable being short the euro now, because you had an opportunity to sell a rally. I love getting a reset out of the way. A reset is where they end up blowing the stops out. A reset is when everyone starts leaning, everyone's on one side of the boat, everyone's leaning short. And you know where their stops are. Their stops are above 37 even, 37 the figure. So you have a blitzkrieg rally there, kind of a panic rally, panic sell-off in the dollar, flight to quality in U.S. Treasuries. And you goose this rally, you knock all those stops out, and now the market's prime to start rolling lower. So that's how I see it. To me, this is definitely a bearish formation. And I like selling rallies to begin with, so I'm much more comfortable adding on to shorts here than having to add on to them on a lower low, right? If you're not sure what the market's going to do, but overall you're bearish, basically you just have to put sell stops below the lows. So when it confirms its direction lower, you automatically get short. I'm more comfortable selling rallies now. I'm pretty bearish on this market right now. Love seeing that correction. Love seeing that reset. Whoops, we almost skipped the Swissy. Dollar Swiss. Similar, I like this big sell-off. Here you can see it pretty clearly. There's a possibility now that this low, the Friday low, proves to be a higher low in the pattern. You haven't seen that in some time. It's really been lower lows. The Swissy's been the story of lower lows, as the dollar has been. This potentially could be our first higher low. If that's a higher low and it strengthens up, and then you end up going out and taking out this high here, that's going to be something. I think that'll really open up the upside. But that's kind of getting ahead of ourselves. Of course, 89 even has to hold as support. This higher low has to hold for it to really get some traction there. Let's look at the E-mini S&P is the stock market. Now here you actually did some technical damage. That's a big level to close below right there. That's a 50-day RTT level, big level. So from a short-term trader's perspective, there's really nothing to do but look to sell rallies coming on Sunday night, Monday in the S&P 500. They haven't said that in a long time. So they did all kinds of damage up front. From an investor standpoint, you really haven't done any long-term damage in the stock market. Likely many investors, longer-term players, will look at this at some point as an opportunity to get long. From a trader's perspective, however, you're looking to sell rallies. From a short-term trader's perspective, you're definitely looking to sell rallies now. In the S&Ps, this is the first time they've did some serious technical damage overnight in a long time. So that's a pretty good sell-off. It wouldn't surprise me if you get more of that. Gold market. Gold, you could say, hey, gold did great, had a big update. Here's my concern about gold. You're at a 50% retracement in an overall downtrend. Gold's been tricky. Hey, let's face it, all these markets have been kind of tricky because you had strong gold was strong when the dollar was strong. Gold was strong when the dollar was weak. How do you play that, right? The key is it's going to have to prove itself. You had a lot of indecision today, and I'm thinking from a trader's perspective, you have the real possibility of a reset here also. It's tough to write off strength in the gold market, even though you are just below that 50%, because when the dollar was strong, the gold was strong. When the dollar was weak, the gold was strong. So it's been strong. My concern is this 50% level, though. It's stalling out there. And, of course, overall, you have a pattern of lower highs and lower lows. So to get me excited about buying a dip in the gold, I'd need to see it eclipse that purple line. So to get me excited about buying a dip in gold, you'd really have to eclipse that green line. You'd have to eclipse 1,300 on the upside. Then I'd be interested in buying a dip. Next market, the corn market. As I said last week, I like dollar cost averaging corn on the long side now. I had been saying that all along on the approach to $4. You started getting down towards $4. Corn firmed up. So I hope, I think you start buying corn. Do it in an ETF, though. Don't go with the margin futures unless you have deep pockets. I guess even if you have deep pockets in that corn, you want to start nibbling with the mini corn. But otherwise, you have that ETF, CORN, and I think you start buying corn here and set yourself up to dollar cost average it and hope it goes lower so you can accumulate it. So we like corn as a long-term investment. At some point, you will have a weather scare, and corn can jump in a hurry. Okay, from a historic perspective, it's not unheard of now. $8, $10 corn, right? You just had $8 corn last year, so love corn, love accumulating corn at that $4 level, and prepared to buy it if it goes lower also. Corn and energy play too, because you've got the ethanol component. Hey, let's look at the crude oil market. Crude's stalling out at a RTT level there, big RTT level. Now you had a couple 4-hour closes above that level, so I don't know. I think you're range bound now. I think you've got 100 on the upside and 91 on the downside, or 91.5 or so. So I'm not too terribly excited about crude oil. It's been slow to go down. Generally I'd be excited about potential sell signal against this area, but you had a couple 4-hour closes above it the last couple of days, so that tells me I don't want to go along with this. That tells me I don't want to go along with any short-term sell-off. I think perhaps you get a dip and then you get a test of par up there, 100 again. So to me, that's a level to watch. Last market we're going to cover the 10-year note. As I said 2 weeks ago, it's going to be nearly impossible to get any kind of a euro sell-off, dollar rally with strength in the 10-year note, right? So strength in the note, that means weakness in the dollar. I'd much rather sell a rally. Now, that being said, I'd much rather sell a rally and buy a dip from a trader's perspective. So now you have a decent rally to sell. The 10-year note perhaps looks a little bit more interesting. If it eclipses this 50% level, that purple line, all the better. Then you get a shot at selling the 26 handle. Here's what you want to remember overall. You have a big downtrend, right? So overall, in the big picture on the weekly chart, you have lower highs and lower lows. So, well, flatten out a little bit in here, but yeah, I don't mind taking a look at selling rallies in this market. And as I said before, I don't think you see serious euro weakness until the 10s can turn around and start going lower, until you start seeing actual real higher interest rates. That'll do it for me. My name is Jay Norris. I'm a trading instructor at Trading University. Thank you so much.